Hi there, everyone. It's Ifti from Extreme Returns. Thank you for joining me for a company analysis on one of the stocks in my portfolio, in your portfolio as well, if you're copying me. So quick background, I'm a chartered management accountant. I've worked for big companies like Unilever and Mars Confectionery. I've done headhunting and recruitment consultancy. I then decided to become an entrepreneur, set up my own estate agency, did that very successfully. I'm currently doing with my family car-to-car, peer-to-peer car hire on the GetAround and Etoro platforms. We're the largest in the UK. If you want to jump across, you can see a fun cartoon I've made. Just type in 𝙔𝙧𝙤𝙤 my story and you'll see it. It's only 1.5 minutes long, 1.5 hours, no, 1.5 minutes. And here's an interview with me on the BBC. I've been featured in multiple other places like The Independent, Evening Standard, Motoring News, etc. I set up on Etoro an account called Extreme Returns, although I've got another private account. We have to keep it private because we're popular investors. That's been going on for nearly a year. But Extreme Returns has only been going 4 months. Markets took a big dip in the last 2 days. This was nearly 15%. So we've taken a big hit. I expect it to recover. UK markets are open, but the US isn't open. It's the 24th of February. 36 copiers. Thank you to all of you. 240 followers. Thank you to all of you as well. So today, oh, by the way, would you mind subscribing to the channel? It would really help my stats, but it's really quality I'm interested in. Today I thought we'd look at a company called MONCLER. Now, very interesting company. Let's go through the financials and I'll take you through more detail about their ownership structure and why I put them in the portfolio. So for those who don't know, Italy is one of the capitals of the world of fashion. And MONCLER is at the cutting edge of that, the forefront. It's based in, I think they're in Milan, no, Venice. Very nice part of the world. It produces, distributes clothing and accessories through the MONCLER brand. For men, women, and children, it offers mainly sportswear, outwear, knitwear, and ski wear, including jackets, shorts, sweaters, trousers, and so on. It's got a mix in terms of the way it sells. So it's got 122 stores, but it operates through franchises and through other stores and wholesalers as well. Looking at the revenue, it's grown from 2015. You can see the graph there. Took a hit, obviously, in 2020, but it's been growing very steadily and organically, 10% compound annual growth rate. Given that 2020 was an exceptional year, understandably, is a really good achievement. Now, net profit is even greater than total revenue in terms of the compound annual growth rate. So that's good. That means that they are translating all of their revenue, extra revenue, into profit. So they're growing at 10% compound annual growth rate, but they're growing their profits at a higher rate, which is fantastic. Operating margins are very good. Now, it's difficult to tell you unless you compare it with other brands, but 28-30% is really good, and the return on capital employed is one of the best I've seen. Those kind of numbers in nearly touching 40%, I'm going to exclude 2020, is something really good. Something even more impressive is what I think is the most important single indicator, and that's the free cash flow per share. Now, let's look at their definition. So the Stockopedia say that free cash flow is a measure of the amount of free cash available to a business after it's paid its operating costs and after the effect of capital expenditure. This is the cash that will be free every year to provide a cash return to shareholders or reinvest in the business, I guess. As such, it is vital that the company is generating free cash flow, and companies that are able to do so on a regular basis are considered to be of high quality. It's paying a dividend well, not last couple of years, but it was paying a dividend, and it expects to pay a dividend this year and next year as well. And the dividend growth has been remarkable. Look at the percentage gains there. And it can easily afford it. Dividend cover, let's see what they say, but the dividend cover is, they say dividend safety, but it's how easily you can afford to pay it. And I'm not going to go into the ratio of it, but the higher that number, the safer it is. And anything really over 2, I think, is very safe. They've got plenty of cash. This is all in euros, 762 million sitting there in the bank account. Now, interesting things. Let's look at the PE ratio. It's 37. The PEG ratio, which is price earnings growth ratio, which it's like the PE ratio, but it takes into account growth, and anything below 1 is exceptionally cheap. This is 3.2, which means it's expensive. But that doesn't deter me too much, because I look upon this as a recovery growth stock. The fact it's paying a dividend, we've already looked at that before. It's fantastic. And they say 69, it's gone down, but a lot of that, I think, is due to the fact of, the fact that a lot of their shops are closed. One of the things that's really impresses me about a company like this is the fact that it's got, all right, you can see it's got some really blue chip fund managers, Morgan Stanley, BlackRock, Capital Research, Invesco. It's got the Norwegian Sovereign Wealth Fund, which is the biggest in the world. Obviously Vanguard as well. But the one thing that really impresses me is that the co-founder, Remo Ruffini, is still a major stockholder. He owns more than 22% of the company. Now, there's a lot of research that says if you are generating reasonable organic growth, and they are, and translating it into profits, growing the amount of dividends you're giving back, and also producing very good cash flow on a compound annual growth rate, and you have a co-founder who runs the company, that mix or that potential is the checklist I use to say, yes, I'm going to invest in that company. So I love that. Now, let's go across to Seeking Alpha. Now, you see the share price is slightly different. I think it's in dollars, that's why. They've got some excellent research. So I'm just going to go through 1 or 2 articles here. So in this one, which was published last month, it says, Moncler recently acquired a men's apparel company. I'm positive on the deal, says the author, who is written by the Value Pendulum. Wish they give the name as well. I'm positive on the deal, he says, because the acquisition price is reasonable and there are multiple synergies associated with the acquisition. Moncler's third quarter 2020 financial performance was decent, and there are expectations that the company could stage a recovery in quarter 4. It trades at a consensus forward. I forget all of that. That's out of date now. And the name of the company is Stone Island that they acquired. Going back in time, they've been covered a lot in different articles, and most of it is very, very positive. So I'm not going to go through all of this. This is just going to be redoing a lot of the stuff which is already on here. But I think Moncler is a fantastic company that it's very different to the normal kind of things which normal stocks which a lot of people are chasing on eToro, the US tech companies. And I think the fact that it's European, it's in high margin, it's ticked all the boxes I wanted, and it's got a very bright future is fantastic. It really is. Just as a comparison, I also have a much larger company called Kering, which I'm going to do a separate piece on, but that's about 5 times bigger, and they've got brands like Gucci, Alexander McQueen, Bottega, all sorts of fantastic brands which everyone's heard of. Now, they're French, and the interesting thing about them is that they are majority owned by the Pinault family, who are big investors in luxury goods. So if you compare Kering with Moncler, they both have very good stories in terms of what they're looking at in the future, and I love that. But I've got both in the portfolio. Okay, I think that's enough for now. If you wouldn't mind copying me, I would really appreciate it. Also think of copying my wife, who's got the, as far as I can tell, the only Asian focused fund on the whole of eToro. She only looks at the Asian markets, so China, Japan, Taiwan, and the Asian tiger countries. So this is Ifti. Thank you very much for subscribing and joining. Oh, by the way, I'm nearly finished with this book called the ICWIM, International Certificate Wealth Investment Management. It's something which eToro asks us to do, and that gives further proof of understanding investment. It's a Chartered Institute of Securities and Investment. Brilliant. Thank you very much, everybody. See you guys very soon. Take care.